Hi, folks. We are looking at a monthly chart of gold, and the key message that I want to communicate in this slide is that by January of 2023, this analysis predicts that gold will be at least $2,500 an ounce. And let's just break that down and see how we got to this chart, and it should become clear. So there's the question, how did I get to that previous chart? For me, when I'm looking at a blank chart, I always start, what are the horizontal support and resistance levels? And of course, given gold, we don't really have the fact that we're up all new all-time highs, there's no structure for price to pull back to and find support on. And so I don't want to draw my line like that. I don't think that that is realistically where resistance would be from this previous price rally. I prefer, and of course, prefer, key word there, preference. My preference is to draw my horizontal support and resistance more at I'm more interested in the open closing prices than highs or lows, and spiky highs like that in particular. That's buyers pushed price all the way up to here, and then sellers stepped in and pushed price right back down. That's where I would draw that line. And then the key point there, regardless of where we draw that line, note that gold is making a new all-time high in the US dollar. And so obviously that is the key point. Doesn't matter where we draw our horizontal line, the current price of gold is above that line. That's the point to be clear on. And then my first choice for tools when I'm drawing is always Andrew's Pitchfork. And so let me throw one of those onto my eye after drawing thousands of forks is obvious. And let me take that bottom line off so we don't have to look at it. There we go. And so with the Andrews Pitchfork, and of course in this case we have a modified Schiff version of Andrews Pitchfork, it becomes even clearer that this is a significant move that gold is currently making. So not only is the price pushing up well above previous highs, it appears, this is July 28th. So unless we get a slap down in the next 3 days, it appears that price of gold is going to close well above those previous closes. And again, we're on a monthly chart, so we're talking significant moves, not this isn't noise. This isn't price flapping back and forth. And so on an Andrews Pitchfork basis, price has clearly broken above the median line of this modified Schiff fork. The next price target becomes the next median line of the fork, and that's as much as $2,500 if we were drawing because we got to give price a little bit of time to work its way higher. And so, yeah, we get all the way up to, that could give us a $2,500 price target up at the top of that median line, the upper median line of that fork. And so that's interesting. The next thing I'd like to look at, let's throw a 1040. And of course, 1040, that's typically and let me reset this chart. That's the parameters that we use on a weekly chart, and again in this case we're looking at a monthly chart. The point I want to make with the moving averages is that way back here in 2000 middle of August, more like March of '02, that makes sense. We got a buy signal, from the moving averages. Fast average moves above the slow average. way back here in early 2002, that signal marked the start of 10-year bull run. Notice that the fast average here didn't recross the slow average for 10 full, well actually, let me be fully correct here. The fast average didn't recross the slow average for 11 full years. And folks, I'm going to call this a breaking point on this video. I will continue in part 2. Thank you for sticking with me.